What if I were to tell you, following yesterday's historic stock market rally, that today we actually had a historic intraday sell-off? In fact, it was the worst sell-off that we've seen since March of 2020. And what if I were to tell you said sell-off was this close to causing a circuit breaker halt to the downside? And what if I were to tell you that all of this happened and yet it was an inside day? Folks, I'm not just telling it to you. That's exactly what happened in the stock market today, and it was absolutely Looney Tunes land. I'm so excited to give you this breakdown because what we just saw, by definition, was historic, chaotic, insane, and it makes me just want to cry in my shower. In this video, I'll be breaking down all the insanity of the day, but most importantly, I'll be prepping you up for what to pay attention to tomorrow to close out the week. Of course, if you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good jazz. And with that being said, let's rock. By the time the world's largest casino went dingity ding ding ding, here was the official headline. Dow tumbles 1,000 points, wiping out a chunk of Wednesday's historic rally. And if you look at the heat map of the S&P 500, granted, there's a little bit of green in the top right there, consumer defensive, but the rest of it is pretty much a bloody mess. And if you actually look at the price action of the day, it was crazy. We opened up, a little bit of enthusiasm, then we puked, then we bounced, then we puked, then we bounced. And it was pretty much the same for the SPY, for the NASDAQ, for Bitcoin, for our favorite tech stocks, and really volatility looked the exact opposite. At the end of the day, we had the SPY dropping 4.4%, the NASDAQ down 4.2%, Bitcoin down 3%. So overall, not so good, especially the fact that VIX, the volatility of the S&P 500, ended up gaining about 20%. Obviously, absurd market swings are here to stay, and apparently volatility is going nowhere. So let me break down everything that actually happened today. And to have a better understanding of today, you really have to start off early in the morning when we were all getting ready, and we got this update that just maybe the president is coming for Jerome Powell. Trump asks Supreme Court to let him fire top agency officials. President Donald Trump has asked the U.S. Supreme Court to allow him to immediately fire top officials at 2 independent agencies. The case is testing a 90-year-old Supreme Court ruling that lets Congress shield high-ranking officials from being fired by the president. Now, it's not explicitly stated that he's going after Jerome Powell, but a lot of people are saying that's the guy who has the target on his back, especially with some of the recent commentary and this craziness with the trade war and the 10-year yield and all that good jazz. A lot of people are making the pretty logical assumption that this is who he's coming after. So that's how we all woke up. And then from there, we got a very important inflation report, the CPI inflation report. And in reality, it was pretty good. The March CPI report came in at 2.4% when the Wall Street expectation was 2.5, i.e. inflation came in lower than expectations. That's good. We want inflation going down. And then by the time you take out food and energy, i.e. core CPI, pretty much the similar tune, came in at 2.8 when the expectation was 3.0. As you could tell, once again, inflation coming lower than expected. That's a good thing. That's what we want as an economy, as a country, especially the Fed and monetary policy. We want inflation to come down, and that's the report we got, which is why, especially off the heel of yesterday, we had a little bit of enthusiasm coming into today. I would argue that there truly was a good reason to be optimistic. Not only do we have the trade war tensions boiling down from Trump's update yesterday, but with inflation heading in the right direction, things were looking pretty bueno. Inflation in the US is now down 60 basis points in the past 3 months. It's not exactly where we want to be, but man, oh man, is that a nice trend. I do want to very quickly call out that tomorrow, Friday, April the 11th at 8:30, an hour before the stock market opens, we're getting another inflation report, but this time around, it's the PPI, the Producer Price Index. All right, so let me put that little nugget of information into context of the trading session today. Even though that was good news, we were still opening below where we closed out, and there's a couple reasons for it, and in reality, the real reason is probably a combo of all this. First of all, yesterday was a historic run, so yes, the market does naturally mean revert when you have that big of a moon. These were historic gains. On top of it, there were people who were probably a little bit late to the party, so a bit of FOMO, and those people are like, uh-oh, do I really know what I'm doing? You had some people who were probably short-term traders locking in gains, but most importantly, you probably had people realizing that the trade war is still on. It's not like tariffs are completely gone. Yeah, there's there's a 90-day pause, but everyone's brought back down to 10%. And then if you look at things like steel, aluminum, and automobiles, they're still at 25. So this was probably more of like the sobering day after of like, okay, we're not really out of the weeds quite yet. So now that we're all on the same page, you're probably thinking, okay, that makes sense. A good inflation report, but maybe we put the cart in front of the horse. So this little bit of a gap down makes sense. But why did we get this sell-off? Well, midday, we got some news. Breaking, the White House says that the tariffs on China are now at a total of 145%. And keep in mind that the US imports $439 billion from China in 2024, which means double that in fees. Or to put that another way, that means that we're going to sell off from roughly 5,300 and some change all the way down to 5,115. Now remember, when you're talking about circuit breaker halts, the level 1 circuit breaker halt for the overall market happens at 7%. That's a 15-minute halt. That's the first one. Then 13%, that's another halt. And then at 20%, that's your third one where they turn the market off for the remainder of the day. And you're measuring from the previous day's close. When we opened up today, it was in the realm of down 2%. So that's a big jump, but the fact that we gained over 9% yesterday, obviously it's not pretty, but you could stomach it. It got crazy. At the extreme today, we were down 6.3%. We were this far away from a legit circuit breaker halt, and obviously this is the biggest intraday drop-off that we've had since March of 2020. And had we gone a mere 40 more points, that's exactly where we would have turned the market off. Now, obviously, we're looking at the S&P 500, and if you bring up the NASDAQ, it's even crazier. From the closing value of yesterday to today's open, down 2.6, but if you look at the extreme, we did breach that 7% number. Now, you might be thinking, wait, you just said at 7%, we get that 15-minute halt, and we do, but there's really strange rules of when you hit it, it starts a 2-minute timer, so if you tag the level and then bounce on top of it and you hang out there for more than 2 minutes, it actually removes that 7% number and it's just the 13% halt. Now, on the other hand, if you hit it and it bounces and then starts to drop and then that 2 minutes, then you actually get the halt. So the reason that we actually didn't halt there today is because as soon as we tag 7%, we quickly bounce out of it. That's kind of a rough explanation. Obviously, if you want to look at the nuances, go feel free to check out it on the CME's website. But I had to look into it today because I myself thought as soon as you hit it, you get the circuit breaker halt. But there's this weird 2-minute thing where if you can stay above it, you're actually fine. But then if you quickly drop, you're actually going to get the halt. So weird stuff. But yes, NDX technically hit 7% today, but because of like just some weird little edge cases, we didn't get that circuit breaker halt. So basically, we're in the extreme world of whiplash. We went from a record-breaking gain yesterday to almost a record-breaking sell-off today. And you might be thinking, well, what did all the people who were touting this as a victory yesterday have to say today? Well, the Treasury Secretary Bessent on today's market reaction, up 10, down 5 is not a bad reaction. Hey man, you're not seeing my 0 DTE portfolio. And then of course they had to ask Trump himself, and I love what AI is doing these days. Trump on stock market drop? I haven't seen it. These glasses are a little bit too dark. I don't know what's going on. It's not going to surprise you at all to find out as crazy as the stock market was. Same thing in the options market. We pumped, we dumped, we pumped, we dumped, we pumped. It's all just this chaotic, high octane volatility we have right now. It's hard to find a place where things aren't going this nutty. What's even more insane is that explains the first half of the day. We have an idea of a little bit of a reasonable gap down. We have an idea of this sell-off, but what gives with this pump? What happened there? Well, once again, we got an update from the government. Trump would love to get a deal with China. And then on top of that, he quickly followed up, think we will end up working out something good for both countries. A little bit of, once again, tensions coming down and a little bit of optimism that the market very much wanted. And just to add a little bit of icing onto the cake there, that really gave that market the oomph into the end of the day. According to Trump, first deal on tariffs is very close. So in a nutshell, that's why we had so much whipsaw. And unfortunately, I have to be the messenger to tell you that it's gonna be here to stay. I wish I could tell you volatility is going to calm down and we can get back to normal trading. But if anything, we have a couple things on the docket that are going to make it crazier. Of course, I told you tomorrow we're going to get another inflation report, the PPI report. But don't forget, we are now at the start of earnings season. Tomorrow, Friday, we're going to be hearing from some of the biggest financial players, JP Morgan, BlackRock, Wells Fargo, Morgan Stanley, and I'd be willing to bet my net worth that they're going to have a lot to say about the current political climate, the tariff situation, and everything in between. So you got to pay attention to it. it because it's going to have a huge influence on tomorrow's trading session. Speaking of tomorrow's trading session, I want to call out a couple levels that I really think you should care about, and it's as easy as this. Pay attention to today's high and low, which was roughly 5,353, and the low was 5,115. The break of that, or the breakdown of that, and then from there, obviously, we're watching Wednesday's high and low. Pretty simple, but the craziest thing on this chart, as I explained to you, is the S&P 500 was this close to a circuit breaker halt, while the Nasdaq technically did hit the level, and because of a weird nuance rule, we didn't get the circuit breaker halt. That all happened, that craziness, in an inside day. I never, ever thought in the history of the stock market would we ever be talking about a situation where the overall market almost limit halts down, circuit breaker halts down, and it's an inside day. This should be hung in the Louvre. Truly, that is the best depiction of the current chaos in the markets. That's what I have for you. I would love to hear from you in a comment below of, do you think, even with all this chaos, that the bottom is in? Do you think that right here, what we just saw is the time to buy? Or do you think there's a bit more pain? I would love to hear what everyone in the Goonie community is currently thinking. Obviously, I appreciate your time. I appreciate the good vibes. I'll catch you in the next one.